Oh boy, ladies and gentlemen, we have a big week ahead in markets. We have the first Fed rate cut, and we'll discuss that in depth in this video. We will also go over the latest in regards to Rezolve AI. It seems a lot of people are starting to realize the opportunity in this company. And we need to talk about this and what this week could look like for Rezolve, in which I think Rezolve is going to see a massive rally into the end of this year. The big catalyst is obviously on October 1st. That is when the company is, in my view, going to raise guidance by a substantial margin. And we'll discuss why that is, how it's obvious at this point that guidance is going to be raised. Okay, it's wild. I still have people that ask, like, why am I so confident? For anyone that has not followed this company, I will share the insight with you in this video. Hit the like button, subscribe to the channel, check out the link down below in the description of this video. If you want to come invest alongside myself and over 200 members in the trading community, we're going out finding small cap AI stocks like Rezolve before Wall Street loves them. Okay, high quality AI. That's where you want to be. Specifically in the small cap area that is often ignored, can lead to some pretty exponential returns. And I think we're just getting started with Rezolve. We did identify Rezolve at about $2.80, $2.50 in the low $2 when we started acquiring positions in the company. Okay, so the stock's at $6.80 per share, but I think we could be between $20 and $30 per share by the end of this year, and October 1st is a big catalyst to get us there. Now, before we get into all of the exciting things that we're going to talk about in this video, one thing that keeps coming up is about Dan Wagner and Power Technologies. Okay, Power Technologies collapsed into bankruptcy in early 2016. Guess who was the CEO? Dan Wagner. I made a video on this already, but clearly a lot of people did not see it. Okay? I get asked all the time, what do I think of this? Well, my thoughts are twofold on this. I don't like to judge someone off their past. Okay, number one. Try not to as much as possible, but it's understandable why some people, probably newer investors, look at this and say, wow, this is not a good sign. Okay. This company, long story short, they spent a lot of money. They were a private company, could not raise money when they needed to, and went bankrupt. Fairly easy to do so if you're a private company and cannot get funding. You don't have the markets to go to, right? You're less known, right? You're a private company. Okay. It says Power Technologies, once valued at $2.7 billion, was found to have inflated its customer numbers and significance of its deals, with many contracts being non-binding letters of intent rather than binding agreements. Dan Wagner refuted all of this. On this note, he basically said these were contracts. They just did not have time to be fully fulfilled. Okay. Dan Wagner actually commented on all of this. There's allegations that, there were strippers at Christmas parties. Okay. That was true. That actually happened. Like, I want to be invited to Dan Wagner's Christmas parties. They sound like crazy. Okay. He admits he shouldn't have done that he was actually not there, that somebody else, another executive at the company at the time, designed that Christmas party. Okay. So there's a lot of weird allegations like that. Okay. I actually look at this as a positive for Rezolve, and I'll tell you why. You learn from your mistakes, right? There was obviously a lot of mistakes done with this company. Some of which just really comes down to bad luck. Like, you just weren't able to raise capital when you ran out of money. The accounting probably was not up to standards. Okay. And you learn from your mistakes. One thing I will really point out to a lot of people, Power Technologies was a private company. Rezolve is a public company with partnerships with Microsoft and Google. Does that just mean you stamp the green light of approval on the company? No. But some of this shit that happens in a private company cannot happen in publicly traded companies. Okay? Hence why normal investors, people that work a 9-to-5 that are not rich, cannot invest in private companies, because this shit happens all the time in private companies. It just does. There's less accounting standards. There's really no accounting standards unless you want to go public. From that sense, a lot of shady shit can happen in private companies. And I'm not saying that happened specifically here, but it just wasn't a situation of great management. There was cracks. The accounting was not great. That's not the case with Rezolve. Okay. And having this out in the open is actually a positive for Rezolve. Like, they gotta have their shit ducks in a row. So I don't worry about this at all. Okay. Like, I pay no mind to this. If you want to find the article where Dan Wagner, stands up for himself and rebukes all of this, just let's look up Dan Wagner, Power Technologies lawsuit, probably. You're going to find these articles. Okay. Yeah, Dan Wagner on parties. Okay. You're going to see this. Very easy to find. So I recommend you look into it more if you're nervous around this situation. I'm just not. I don't think it matters for Rezolve. Okay, great. Now that is out of the way, October 1st is going to be a big day. Here's the deal for anyone that does not know how I know or why I believe the company is going to massively raise guidance. So the company spent 9 years developing the product. From 2016 until early 2025, they started selling to companies 2025. Okay. They set out this year with a 90 million ARR target for the end of this year. They achieved 70 million in ARR by about midpoint of this year. Well, simple extrapolation math here would say they're running at about 150 million if things were consistent throughout this year, growth-wise. Well, funny thing is, Rezolve went out on their X account and said, oh yeah, we're actually seeing accelerated growth momentum. Well, that's good, right? That's not saying even growth was holding consistent, right? It says here, Rezolve AI to announce strong first half 2025 results and accelerated growth momentum. Accelerated, keyword, growth momentum. We've heard a lot of comments from Dan in recent events where Rezolve's AI is exploding. Dan Wagner even said recently, we're going to see a massive re-rating in the stock next year. Like, significant upside from here. And that's only going to happen if they massively raise guidance. So the target right now is 100 million. I see on the low side 150 million. On the high side, 300 million in ARR this year. Now, could it be higher than that? Potentially. But that's kind of my range. 200 million could be a little bit more likely. Kind of that midpoint of my expectations. That would be a 100% guidance raise from where we are right now at 100 million in ARR. It's going to be a big guidance raise. And that's what sends Rezolve really to the next level. Now, I personally have my own opinion here that NVIDIA is going to take a stake in Rezolve. I have zero evidence of that besides maybe the recent surge. Maybe some of that was NVIDIA taking a stake. I don't know. I just have a feeling NVIDIA is going to take a stake in the company. I had a feeling NVIDIA was going to take a stake in Nebius. It's actually funny. I said this back in April before NVIDIA's 13F filing came out, and I knew the exact date that NVIDIA's 13F filing was going to come out, and I was almost certain Nebius was going to be on that filing, and I was going to buy some options on Nebius, and just got, I think I had my son and I was just dealing with some shit and didn't have time. Markets closed. Next thing you know, woke up the next morning, Nebius was up like 35%. Would have made tens of thousands of dollars on those options. Okay, live and learn. Next time I have a speculation, I, maybe consider it a little bit more seriously, okay? And for whatever reason, I think Rezolve could be a target of NVIDIA, okay? And then buying a stake. It could even make sense with, again, the rally we've seen with the stock recently. There's a lot more investor appetite around the company since their de-SPAC is over with. They are now an independent company. And, of course, we're going to get some really good guidance on October 1st. But what's also really unique about Rezolve, it's kind of like GameStop in 2021 in a way, okay? Because you have like 40% of shares owned by institutions, 10% or insiders in the company own about 40%. 10% is owned by institutions, which is still a very low number, but that's 50% of shares right there owned by likely people that are not planning on selling anytime soon. Like institutions just started buying. Could they sell? Of course they could sell, but they just got in, okay? 14% of the company is owned by private companies that have been invested in the company for a long time, that have believed in the company for a very long time. That's 65% of shares right there owned or almost locked up, right? And then you have the retail investor base, myself and others, that identified Rezolve as a massive opportunity that have no plans on selling anytime soon. By my calculations, you could have 85% of the float locked up right now, artificially, okay? Now, just consider this. Just insiders owning 40% and private companies owning 14% is 54% of the float that is not moving. Maybe even insiders are buying more. That wouldn't surprise me heading into October 1st. There's a restriction of shares. So for an example, Rezolve is going up like 20% on 29 million shares trading hands. That's not a whole hell of a lot, right? Back here when it went up 20%, the stock was, call it $5.25, times, let's even round up, 30 million. That was only $157.5 million in dollars bought in the stock, right? Or worth of volume. That's nothing compared to, again, let's look at Tempest. That's been one that has, really risen to fame recently. Let's take any good day for Tempest, okay? This day here, it went up 13.5%. It had 21.2 million for volume. Okay, so let's plug that in. But it's an $86 stock times 86. That's $1.8 billion worth of volume. That is like 17 times Rezolve's. Just to show you how crazy that is. Rezolve went up almost 21%. Tempest only went up 13.5% on this similar, good day. But Tempest had 17 times the dollar amount traded in Rezolve. here's the point I'm trying to make. October 1st, when Rezolve gets put on the map, or when Nvidia takes a stake, one of which is inevitable or both, once retail really gets sold on this company and volume comes in and real dollars come in, there is a lack of shares available. That is why the upside can be so extreme in this company. Now, not to mention, there is short positions in the company. Now, there's not a lot of short positions, but think of the short positions that we have today, again, as really being amplified, okay, when they go to cover. Because there's not a lot of shares just freely trading every day, because of how much of the flow is locked up. Again, even just by insiders owning 40%. That's huge. A lot of retail owns a lot. Institutions own a lot and have no plans in selling. Private companies own 14% and have no plans in selling, okay, from what I can tell. And you have 9.22% short interest of free float. For every share that shorts try to cover, it's going to be difficult to find those available shares. They're just going to have to pay more and more and more as people become willing to sell more shares as the stock goes higher. You could see a pretty dramatic short squeeze with 9% short interest of free float because of how the shares are locked up. Okay? Not a lot of shares out there. You can see this also represented in the cost to borrow fees. Okay? Cost to borrow max 237.5%. Cost to borrow average 97.66%. Minimum cost to borrow 63%. It's not a lot of shares out there. Once we get that big catalyst that puts the stock on the map with retail, same with happen with all the other big, AI stocks, whether it's Tempest, Nebius, Novartis, SoundHound, BBAI, Applied Digital, right? They all have that big catalyst that put them on the map. Rezolve has not had that yet. When that happens, you're going to see that all I'm saying in this video, I'm just giving it to you early. I don't know when the exact date is going to happen. I know October 1st is going to be a huge date. That should really put the stock on the map for retail. Maybe it's another catalyst. Who knows? But I'm just giving you this information before. I'm early. Okay, I love to be early. But to me, again, not financial advice. I'm not a financial advisor. It is inevitable. It's a matter of when, not if. Thus, again, depending on what happens, if, again, in a really optimistic scenario, Nvidia takes a stake in the company, they massively raise guidance on October 1st, like 200 million plus. This stock's going to easily be a $20, $30 stock by the end of this year. I think you are at risk of dilution at those levels between $20 and $30. Don't be surprised if you did get some dilution. But again, I don't think it'd be a scenario where it crushes the stock, right? In my opinion, again, at these levels, it's hard to lose. But I'm not a financial advisor. I'm not a financial planner. And I always could be wrong. Now, this week, we also have some very big catalysts. Now, for Monday morning, you have New York Empire State Manufacturing Index at 8:30 in the morning. Not really going to be a big catalyst. Tuesday, retail sales month over month. With all of Wall Street concerned about the economy and the labor market and how are things going out there, you want to see a strong retail sales number, or at least an in-line number. Consensus is 0.3%. The previous month was 0.5%. You will also get export prices, import prices month over month, and some smaller data as well, like industrial production month over month, capacity utilization, and manufacturing production month over month and year over year, as well as business inventories. All of this will feed into a new GDP estimate from the Atlanta Fed GDP Now tracker, which is currently estimating 3.1% GDP for Q3. You also do have a 20-year bond auction at 1 p.m. and the NAHB Housing Market Index that comes out at 10 a.m. On Tuesday. Now, on Wednesday, you have housing starts and building permits, but You have the Fed interest rate decision, okay? So here's the deal. You're going to get the report that comes out at 2 p.m. on Wednesday. What the report is the written statement. That doesn't matter much, okay? Not really at all. But you'll get the dot plot. The dot plot matters a lot, okay? How does the Fed change their rate cut expectations? Okay, do they change them a lot? Do they now project multiple cuts this year? Do they project 1 or 2 cuts this year? How many cuts do they project for next year? That's going to be important because if it aligns with markets, that's going to be a very positive catalyst for stocks. If it does not align with markets, that's going to be a really bad sign for stocks, okay? If the Fed is projecting more cuts than the markets, which I highly doubt, that's not going to be great either, because what in the world does the Fed see? The risk would be, of course, that the Fed expects less cuts than the markets. And then you may need to see some kind of re-rating again that, Wall Street's going to freak out a little bit and say, oh my gosh, we're not going to get as many rate cuts as we thought, blah, blah, blah. I think it's probably going to be pretty close to in line with current expectations. Well, could be, maybe expectations now are a little too aggressive. We're expecting a cut September 17th this week, expecting a cut October 29th. We're expecting a cut again on December 10th, and barely, it's like 50-50 whether or not we get a cut in January. But, could we see a cut at every Fed meeting throughout the rest of this year? Yeah. The toss-up is going to be, how many cuts do we get in 2026? Okay. And Wall Street is expecting the federal funds rate to be between 2.75 and 3% by the end of 2026. Okay. So that would be 1, 2, 3, 4, 5, 6 rate cuts between now and the end of 2026. I don't think that is outrageous, but could the Fed come in at like 5? Maybe. Could the Fed come in at 4? Maybe. That would be the risk this week, short term, for stocks, is if the Fed comes in with less cuts than people expect. So you'll get the multi-year interest rate projections, and that's what Wall Street will care about. Also, the longer-term neutral rate projections. Did those go up? Did they go down? We're also going to get quite a few dissents. There's going to be some Fed officials that want to do a larger rate cut, like a 50 basis point rate cut at this September meeting, and there's going to be some officials that, only want to do a 25. How many people dissent? How divided is the Fed? That's going to also be interesting. But at 2:30, you will get Jerome Powell, and that is when the real move will begin, right? Once you get Powell, then you get the larger move, right? The confirmation, more or less. Is it going to be bullish? Is it going to be bearish? I love these dot plot projections, though, because you can pretty easily tell after 2, if it's 2 p.m., after it comes out, if you're going to have a positive or negative reaction in the marketplace. You can kind of just tell based on how far off the Fed's projections are versus the markets. And again, we will be covering this in the trading community, trading this if there is an opportunity. Come join it, link down below in the description of this video if you would like to. But there's been a lot of Wall Street that has said, hey, we're going to get a, sell the news kind of situation where stocks are actually going to fall on the first cut. Again, cuts are not in and of themselves bullish or bearish. It is the reason why the Fed is cutting rates. The reason why the Fed is cutting rates right now is to prevent further weakening, because inflation is tame and there's weakness out there in the labor market, according to the economic data. Okay. Nothing is going to change. Okay. From now until we get the rate cut. Like, the economy isn't dramatically weakening in 3 days or in a week or 2. Okay, that's not how the economy works. So I don't think it matters if stocks sell off or even go up after the Fed cut. It's the same situation we were in before. Now, as the Fed lowers rates, especially multiple times, the odds of a recession do come down as more borrowing power can be accessed, right? If you have rates at 2%, there's instinctively less chance of a recession than if rates are at 10%, right? That's pretty basic. Is one cut going to change that all too much? Not really. It's more about what the Fed projects for how many cuts they're going to do. Again, if the Fed projects 10 cuts, stocks are probably going to sell off on that because that would be a recession indicator. If the Fed projects 5 cuts, we're at 6, probably not a big deal. But could you see a knee-jerk reaction, kind of like Nvidia, right? Nvidia had great earnings, massively beat on almost every metric, stellar guidance last quarter. The stock sold off like 2% the next day just because it was priced in. Could a rate cut be priced in? Could 5 cuts be 6 cuts be priced in by the Fed? Probably, right? So, whether we sell off or not doesn't really matter. But I will say, if the Fed does confirm like they are kind of in line with where the markets are in terms of rate cuts, which I think is going to be the case, it does, in my view, set us up for that end of the year rally, right? It is going to be confirmation of that. But what happens in the very short term, day or two following the Fed, meeting, that's anyone's best guess, right? I think the odds are probably tilted towards a sell the news event, because we have done so well in September, and September is seasonally the worst month for stocks historically. Okay. Now for Thursday, initial jobless claims, Philadelphia Fed Manufacturing Index, Philly Fed Business Conditions, Philly Fed Capex Index, Philly Fed Employment, Philly Fed New Orders, and Philly Fed Prices Paid. You will also get CB Leading Index month over month, 10-year TIPS auction, and Friday, nothing. Slow day. So, it's going to be a crazy week this week. Tuesday's going to be the first catalyst with retail sales. And all of these other catalysts, again, going to feed into GDP. Retail sales is going to tell us a lot about the strength of the consumer and the economy right now. You want to come in line with expectations. You don't want to come in really low. You don't want to come in negative. You don't want to come in super positive either. Okay? But Wednesday is the real event with the Fed. And I think it's going to be pretty in line with expectations. We're going to get a cut. Fed's going to project 5 rate cuts, 6 rate cuts over the next year, but that may not be taken as great because you're probably already pricing that in with stocks near all-time highs. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.